Welcome to the Economy and Politics Show. I'm Ottoabasi Abasiekong. It's a brand new quarter, second quarter 2024, and of course, our conversation today will be on CBN new capital requirements for banks, implications for the Nigerian financial system and economy. For our viewers, the Central Bank of Nigeria released new capital requirements for banks, and the conversation today will be around that. Joining me virtually for this conversation is Mr. Marcel Okeke, former Chief Economist, Zenith Bank, with over 2 decades experience in the banking sector and a financial analyst. Nice to have you, Mr. Marcel.
Thank you very much for having me in this program.
Of course, you're aware, just a day before the just concluded Easter celebration, the Central Bank of Nigeria released the new capital requirements for banks, put it as recapitalization requirements, and of course, we've seen the whole spread. Was this the right timing in terms of signaling, and what is your take on the different levels of capital requirements? We have 500 billion naira for banks with international presence. For national presence banks, we have 200 billion naira. We have for regional banks, 50 billion naira. We have for merchant banks, 50 billion naira. Non-interest banks, 20 billion naira. And this at the regional level, that's non-interest banks, 10 billion naira. Also for the merchants, there's also the regional part. So I just want to know, is this the right timing for this?
If you look at the banking sector, the last time recapitalization of this nature was carried out about 20 years ago. Or if you want to be specific, you say 19 years ago. Okay? That was under the governorship of Professor Chukwuma Soludo between 2005 and 2006, or 2004, 2005. And he gave them a period of 18 months that time. So, if you look at a period of 19 years gone by, and then you look at the fact that in recent times, our Naira has crashed, kind of, in the foreign exchange market. The value has gone down, vis-a-vis dollar and some other hard currencies. And then you also factor in the point that late last year, the current governor of the Central Bank of Nigeria, Yemi Cardoso, did mention during his speech at the Chartered Institute of Bankers of Nigeria annual dinner that there will be recapitalization any moment, from that day. And then about now 4 months or 5 months from that time, he made the announcement. The recapitalization, is kicking off. So I would say, yes, this is the right time for that to happen. Okay, it happened almost 20 years ago. Our Naira has gone down in value. Okay, and it's like the system has been pre-informed, if you like. So when you put all these facts together, you see, yes, this is the right time. Also consider the fact that the president of the country did say that he's looking forward to a 1 trillion economy in the next 5 to 7 years. And the banks are being prepared to play their rightful role, you understand, in realizing that size of the economy. So all this put together, you can say this is the right time. That's what I have to say for now. Thank you.
Thank you very much, Mr. Marcel Okeke. I know the Central Bank of Nigeria said the prevailing macroeconomic challenges and headwinds occasioned by external and domestic shocks have underscored the need for banks to raise and maintain adequate capital. Like you rightly said, Mr. Yemi Cardoso mentioned that at the November 30th, 2023 Chartered Institute of Bankers of Nigeria dinner, where he said they were going to look at recapitalization. Now, there are debates that the recapitalization step and requirements for the banks at this point is unnecessary. I mean, some stakeholders feel that the capital market is supposed to be like a catalyst for what you just raised, the $1 trillion economy, but that's the debate that is ongoing. But I want to ask you about the importance of having big and safe banks as it has to do with risk management, because in 2012, we had the era of Emir Lamido Sanusi. Then he was Mr. Lamido Sanusi, Central Bank Governor, came in and had to clean up some activities, some very exposed banks. Now we're recapitalizing and we're seeing 500 billion naira for banks with international presence, 200 billion naira for banks with national presence. Is Nigeria ready for that big bank effect? And of course, how are we going to look at risk management to balance this?
the Central Bank of Nigeria, in preparing banks for what is coming, recently did some kind of study and has given the banking sector a clean bill of health. Okay, so that builds the foundation that banks have a clean bill of health from the Apex Bank. Okay, then on that foundation too, to raise trillions of naira, even if it's only through the capital market, yes, it's going to be a serious task, but it's doable. If you look at the trend in the Nigerian capital market in recent years, I will even say, you see that the market has grown, okay, by leaps and bounds. Okay, you look at all indicators, whether market capitalization or the all shares index and all that, everything has been growing up. And let me also tell you, many Nigerians or outsiders who would have wanted to invest in this economy but could not, invest in some other sectors because of the risks involved, will now be attracted to invest in the banking sector, because you can see that no matter the state of the economy, all these years, the banks have been doing well, generally speaking. You understand? So they have been doing well and coming out with good returns and paying good dividends. So prospective investors have a lot of confidence in that sector. And so what is going on now, or what's going to happen, gives ample opportunity for serious investors from within and outside Nigeria to invest in these banks by way of equity, if you like. Okay? So people who have not been investing here, because of the Naira crash and all that, people who now have dollars, could now bring them in. And once they bring them in, the volume of Naira it will amount to. So it's a veritable channel to invest money because our currency for some time now has lost the what is called store of value, which is one of the key functions of money. Naira lost store of value, and people no longer store their values in Naira. But now they will have opportunity, the banks giving them the chance to invest in the banks because they'll be having reasonable returns going forward. And the industry is also alive and active. So I am very confident that is an opportunity that will attract a lot of investment from within and outside Nigeria. So there is no qualms, really. Thank you.
Okay, Mr. Okeke, I like the optimistic view. But the capital requirements will see banks raise over 4 trillion naira, like you said, trillions of naira. And a major part of that, like I earlier said, will come from the capital market through rights issues. I mean, Access Holdings just published its release. It's published on Procia and other major platforms. It wants to raise $1.5 billion and is looking at 365 billion naira through rights issues. So that's already the first signal we're getting. So the big question again is that amongst others, how do you see the engineering of financing for the banks? Because they really have to raise this capital. And already the central bank has provided the avenues, whether it's a merger and acquisition, whether it's fresh injection of capital to placement or rights issue, or even they have to downgrade, somehow to downgrade, okay, I'm national, maybe I'll go regional and all that. So I just want to speak to the whole scheme of how they're going to engineer financing. What do you see happen? Do you see more mergers and acquisition coming? Do you see some downgrades in terms of licensing? Do you see a situation where from 25, 26 banks that are licensed now, commercial banks, we may go to about 10, 12? And what does that mean in the larger part?
I will not be tempted to lump all the banks together. Every bank is an entity and is a brand. And if you look at each of those banks, for example, you'll be able to, on your own, assess its viability, even in the future. So if you look at the tier 1 banks, okay, I think some people have an acronym. They call them FUGA. You understand? FUGA. Yeah. F standing for First Bank, and U standing for Union, and G standing for Guarantee Trust, and or FUGAS, kind of. A standing for Access, and Z standing for Zenith Bank. So when you look at each one of them, you see that majority of them are very healthy, very, very healthy. Whether in global terms or local terms or regional terms, they are very, very healthy and key players. And so, once they are in the market to raise money, there is a confidence in them, the entity itself, that brand itself, that they can attract investors from all over the world. You understand? Access Bank, that's why they are going for that volume of money. If Zenith Bank goes for it, it's going to likely to make it. If Guarantee Trust Bank is likely to make it, Union Bank is likely to make it, or United Bank for Africa is likely to make it. You know, these big banks are big names. You know, they are global organizations. You understand? So, if there's going to be mergers and acquisitions, I'm sorry to say, it's even it really have to do with those smaller ones. I'm talking about 50 or 10 billion and other, because all of them will, at the end of the day, be going to the same market. You understand? So, investors, you know, in quote, the bigness of these ones I have mentioned and their stability over the years, we now speak for them. You know, you now look at USP, unique selling points. They're going to dish out. Okay, so I don't see people choosing to invest in those smaller, you know, regional or village banks, in quote, okay, as against these major names I have been mentioning. Okay, so these ones are going to do it, because if you now look at it, each one of them has gone either up to 50% or more than that of what they have now. You understand? So it's a question of bringing in the remaining 50% or less than that. Okay. So at the end of the day, if there be mergers and acquisitions, I see that happening among the smaller banks. 50 billion, maybe the 200 billion ones or the 10 billion ones. When these big names have scooped and taken, you know, the major chunk of what is available, you understand? But beyond that, I say that all the banks are viable, and people will see what will be happening now as a veritable way of investing in a credible and stable sector. You understand? Because you see, even in the polity, people are angry that while, in quote, real sectors are collapsing and all that, the banking sector keeps turning in billions and billions of profit and all that. Now, this gives them ample opportunity to be part of those billions and billions that these people are turning in. You understand? So that is the way I look at it. I'm very, very optimistic. If there's going to be mergers and acquisitions, it's going to be at the, you know, the smaller ones, you know, within the system.
Okay, so you say at the regional level, we should see several mergers and acquisitions and even some national. But let's get to the implications for the Nigerian financial system on one hand and the economy at large. You raised something about the fact that people still expect the banks to be a key player in the real sector. But Mr. Marcel, you agree with me. If you look at what has happened over the months, the cash reserve ratio has been high and further hiked to 45%. I don't think that creates the opportunity for banks to really, really intervene in the real sector. And now with these capital requirements, you will see banks trying to gain funds. So how does this engineer the banking system to support the economy? How do you see the financial system playing from this? And generally, how does this impact the economy at large?
Okay, thank you. Remember that I did say that this new capital requirement is part of the strategy, if I must call it that, of the current government to prepare the financial system for the $1 trillion economy. So the banks are being prepared. And they are being prepared to be able to handle what is called big ticket transactions, you know, to be able to fund, you know, major infrastructure within the economy. You understand? Because if you are talking about a rail line that costs billions of dollars like that, or talking about major seaports, major airports, major trunk roads and all that, you know, instead of borrowing from all over the world, you know, to fund these things and pay through our nose, kind of. The banks, you know, with proper capitalization, will now be able to be major financiers, you know, of these kind of projects. That's on one hand. On the other hand, let me also tell you that the CRR you mentioned, nothing is cast in stone. Okay? The new leadership in the CBN have just come on board and done what they have done, you know, in order to stabilize the banking sector and stabilize the macro economy. You understand? So once they achieve that, the CRR could come down. The MPR could come down. You understand? And so on and so forth. So by the time, you know, the banks are made to now be bigger and stable and all that, you know, with the new capital level and all that, Nothing says that the CRR will not come down. To give them the elbow room, you understand? To now, put more money into the real sector. You understand? So, why this is being done to the banking sector? In the real sector, the government is also not resting on its oars. A lot is going on. You understand? Simultaneously, so that, as they say, all things are likely to work together for the good of the economy. Okay, including the strengthening of the banks. Okay, because that's what capitalization means. Because let me tell you, the one with the international approval, like you said, they are global organizations. What the crash of the Naira has done to them now is that vis-a-vis their colleagues in other climes, they will not rank high, okay, because of the Naira exchange rate. But when they now get well capitalized and all that, it will enhance their position and ranking and rating, in the global system. So all these things will work out together. At the end of the day, the leadership of the CBN are not unmindful of what the current tight monetary policies mean to the banks. You understand? So that is why they have to be dynamic and nothing is cast in stone. So as we move on, we expect that those things, will be loosened somehow along the line. Thank you.
Thank you, Mr. Marcel Okeke. I want to get your last word in the next 1 minute. 2 years timeline, 24 months, is that sufficient? What's your last word on this whole exercise? What is the expectation from an expert view?
The 2 years span for a recapitalization is okay, it's good. It puts the banks operators on their toes, so to speak. Because if you make it, 3 years or 4 years and all that, so you're not likely to achieve, some of the intentions. Other things could, in the long time, a lot of things will come and change the scenario, kind of. So the 24 months is adequate, given where they are now. And in terms of the economy, the stronger, the bigger the banks, the better for the economy. The more empowered the banks are in terms of this capital we're talking about, the better for the economy in terms of their capacity and ability, to fund development in the real sense of it. Thank you.
Thank you very much, Mr. Marcel Okeke, former Chief Economist of Zenith Bank and also financial analyst, for this very fresh insight on the new recapitalization drive of the Central Bank of Nigeria and how it will augur for the financial system and the economy at large. Thank you once again for the time.
And thank you very much for having me on this program. Thank you.
Yes. Thank you. Thank you. As we wrap up, let us take you to the second edition of the ProShare Tier 1 Banking Report held in 2023. Mr. Johnson Chukwu, the Group Managing Director of Cowrie Asset Management, shared 2 reasons why recapitalization for the banks was a compelling case in 2024.
If you look at the Nigerian capital market performance, our share index had gained 30.93%. The banking subsector had gained 60.43%. That's 195% above the all-share index. Which other investment class will give you 60% return? So, in the direct interest of investors, it makes more sense for them to even give the money to the banks. Because the banks, like Dr. Adedikwe said, look, have the capacity to read the market and then generate better returns even in difficult environment. And it's very commonsensical. If you look at what happened in the past couple of months, Naira devalued, there was no bank, I can't remember, maybe 1 or 2 banks that suffered exchange rate losses. 90% of the banks enjoyed exchange rate gains because they had been projecting it. If you are a CFO in a bank and you had negatively backed up your balance sheet in dollar position, then something was wrong with you. So any good banker would have known that Naira was going to devalue. And therefore they gapped their balance sheet in dollar assets positively, holding more assets than liabilities. So when it happened, they all logged in profit. So my take is that 2 factors. 1, economic exigencies will require the banks to raise additional capital to meet operating cash flow needs because the ticket of their transaction have increased more than what it was. 2, in terms of accruable income to investors, the banks still generate the highest return on investment. And then, if you also look at the weighted average cost of capital, you have your cost of equity and cost of debt. So get your work. Then if you look at your cost of equity today, it's higher than the cost of debt. So if the cost of equity is higher than the cost of debt, it makes sense to go and assess the cheaper cost of fund. So for me, the most logical thing for banks is to go and raise additional capital in the coming months. Thank you.
Welcome back. And as you can see, first quarter of 2024, the Central Bank of Nigeria brought out the requirements, new capital requirements for banks. And that shows one of the reasons is for economic exigencies. But let's see how it goes. We'll continue to monitor this. Of course, ProShare Web TV will continue to give you updates on the recapitalization exercise, which is to span 2 years between 2024 and 2026. Thank you for watching. If you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further on this show. Till we come your way again, enrich yourself with the knowledge of socio-economic developments around you, because it's a wise thing to do. It's a brand new month, a brand new quarter, and we expect great things. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.